Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Very interesting signals coming up here. We have a potentially very interesting turnaround regarding some things that are popping up in our ETF data. We're going to talk about that and why I think that projects that we are not only moving into this bullish volatility phase of the GameStop price cycle, but potentially something explosively volatile to the upside. We'll talk about why I'm starting to see some of these signals compound, as well as why I actually think today we are headed to the downside. Why I think we're going to have a bit of a bearish pullback today, maybe for the next 3 days before we start to see some movement going forward. We're going to talk about all of this in brief today, and of course later we'll dive into some of these details, some deeper details at today's 4 p.m. Live stream. So let's hop into it today. Gratitude comes first. Thanks go out to, once again, Kurt Lusko, aka Short Fridays, for sponsoring today's video and today's newsletter, as well as to monthly contributors Dats Gruffto, Ken Widmerlin, and Not Medical Advice for helping offset some of my data expenses on a regular, that is monthly basis. So thank you very much, of course, to our team here, as well as to everyone who has supported in the past and will be supporting in the future. So thank you very much. Yeah, so hopping into things today, seeing a number of different things pop up. I mean, immediately, right? I got up today and I said, all right, looked at our charts, looked at our indicators, saw a mix of things. We see some technicals, we see some things in the options data, and we see a little bit of tinfoil that makes me think, all right, we're not going to get that $25 close, right? But I mean, Michael, what are you talking about? We were so bullish yesterday. We're even starting to look pretty bullish here pre-market and off the open. Why no close above $25? We're going to talk about this. And as well, we're going to talk about stuff that's going on with XRT. I have been very fortunate enough to have learned a ton from watching Richard Newton's discussions of what's going on with our ETFs with XRT. I would highly recommend, if you have not had a chance yet, go ahead and check out his channel. Go ahead and check out his videos. Go ahead and subscribe to his channel, because he is, as far as I know, right, more than anyone else has put work into tracking and keeping a running tracker of what is going on with our ETF. So definitely give that a look. So we're going to hop into this. Okay, so yeah, so first off, let's talk about this quick turnaround here. So I'm actually going to pop over to my X channel real quick, because I put up a little thread about this that was pretty digestible. I'm trying to do more of this, right? Trying to get some of my observations in a compact way while I'm writing the newsletter out before I post it. So if you don't follow me on X, I'd recommend you do. This way I can get, if I have a little insight or something and I think like, man, I think people should know about this kind of stat before we even get going, I put that over on my X channel. So if you don't have a chance, if you haven't had a chance yet to subscribe there, I would recommend it. But obviously, all of the prime dives into our details here, video content, is going to be on YouTube. So let's pop over here. So why am I thinking about a pullback today? Well, first off, right, obviously we focus on this, of course. What I started focusing on here is understanding the way that the options market affects our price action. Now, for this week, we are still looking at a 2350 max pain. Now, that is based on open interest, but even still, if we take a look here, if we take a look at our gamma exposure specifically for this week, how is the options market maker, in this case, GameStop's options designated options market maker is Wolverine Trading? What are we looking at here? We're looking at a very high concentration, a lot of call gamma exposure at $25 and above. This means the market maker is highly exposed to the call positions that are right there. Mostly, we're assuming, this is the default assumption based on retail buying patterns, based on retail trading patterns, the market maker is net short these positions and is optimizing their profitability by making sure that this exposure on any given week is driven out of the money. So as we look down, right, 2350 here, finishing below this strike is the pure and assumed optimum, but at least keeping this $25 position, which is massive, right? It's tied only with, I think actually today, just for this week, it's only slightly exceeded by the $26 position. But we have a lot of gamma exposure at 26. We have a lot of calls there. We have a lot at 25. the options market maker is not going to want those to finish in the money. And I will point out, right, that these positions, especially the call wall, this largest position of market maker gamma exposure on any given week, despite intra-week volatility, despite how optimistic we think, like, man, $32, there's no way, say that $30 call wall, that we breached this, we're well beyond this, there's no way this expires, out of the money. And then sure enough, that's what we get. Now 25 is a little bit less sensitive of a position historically than $30, but nonetheless, right, even when we look at the beginning of our last volatility cycle, we kind of shot up through 25 but ended the week just below it on this track northward in November. So that's the first thing that's pointed out to me there, right? This stuff, right, the market maker is not wanting this to close in the money. Okay, so the second thing is some of our technicals. Now, if we look at our daily chart, what was our candle yesterday? Two things stand out to me. One of them, the candle that we had yesterday, was a long-legged doji candle on the daily. Now, the long-legged doji candle is very frequently an indication that a reversal is coming, an intra-trend reversal is coming over the next few days. So a long-legged doji candle is where the closing price and the opening price are very, very close to one another. So we opened around 25, I think, yesterday, and we closed it, I think, 25.02, or we opened at 25.02, we closed at 25.04, something like that. So we we closed at 25.02, open, do we have the open there? 25.02, has it right there on the screenshot. That's why I take the screenshots. So yeah, I mean, our momentum indicators are still looking great. We're moving to the upside. This doesn't signal macro trend weakness over the next 6 to 8 weeks, but this does say little pullback to me, right? Little pullback going into next week. And today's a Friday too. So, right, this is options expiry. This is of supreme advantage with respect to the market maker, the options market maker. So they probably pulled the trigger. We'll look at our price action. We can see where they probably pulled the trigger on some shorting yesterday to get this result, so that they have they're optimally positioned with respect to out of the money call charm, right? So that's a de-hedging pressure from expiring out of the money options with respect to how they'll be able to position themselves below that 25 mark today. So that's the first. We have that shape of candle. But another thing that signals turnaround is volume with respect to that. So our volume did come down substantially versus the previous day. Now, it's not disintegral, I should say, to our trend as a whole. It's still elevated versus our daily averages, but it is much reduced by about 6 million or so shares versus what we had the previous day. So this big, strong, engulfing bullish candle here, 17.7 million shares traded. This guy right here, slightly over 11 million. So we definitely came down there. That is a chart indicator to me that we're probably looking at a short-term, little bit of a pullback in the stock before we continue back upward. And I think a good candidate here on the daily chart is this kind of 2377 level, maybe a little higher, may end up being 24. But again, the market maker is ideally, in an ideal circumstances, looking to see 2350, 24 out of the money as well. That's what I'm reading there. All right, and what else? Well, we do have a little bit of tin. So what's going on here? What am I talking about in terms of tin? I'm going to point out our mystery single share overnight extended hours buyer. Now, I would say that there is a moderate correlation between these share orders, how they are denominated in cents, what they appear to suggest symbolically, and how our trend tends to unfold thereafter. So, for example, during our entire previous liquidity phase, I think we had about 14 or 15 trades, single share trades, that ended in 69 cents. This was all throughout this bearish liquidity phase. And then all of a sudden, after we moved past the Credit Suisse / old Archegos bags swaps in 13, we got a 96. So we got it flipped. And then we started to move to the upside. We saw a 69, right? We saw another 69, a 29.69 right after earnings. So overnight between the earnings release, or when several hours following earnings, And where we opened the next day, right? We closed the next day lower than where we took off. That was the beginning of another micro bearish move there, only to then be followed by a 2096, and we started to move to the upside. And in fact, we can see, actually, we can't see this over on TradingView, notably. Can't see this over on TradingView. But if you go back and look at this, you can see this on Thinkorswim. Anywhere where you have an overnight chart there, you can see this. And so, yeah, so we got a 2096 and now we got another 69. So there does seem to be a correlation between whoever this is. I wonder who it could be. Whoever this is, who Ultimator 5, I'll point out, Ultimator 5 said that this person, whoever this is, knows how to code, because they've been able to code this order entry regularly at a specific time so that it bypasses, it anticipates the loading of the order book for the blue ocean overnight market. So whoever this is found a way to slip in and get this single share order in so that a custom price that is within 20% above or below the closing price, because that's the maximum that's allowed with the overnight market, has been able to enter in that share before the overnight market can get the order book loaded. So we do know a certain somebody who knows how to code who showed that to us, in fact, on a live stream last summer. So it's very possible that this person, whoever they may be, not only knows how to code, but also knows how to read charts very well and has been sending these as potential signals for what's going on with our price action. Now, because this is a 69-cent denomination, right? This is why I say tin. This person seems to be suggesting we're going to move to the downside for a little bit. Now, not critically, but we're likely expecting something of a pullback that would fit with what I'm seeing in our technicals, volume, candles, that sort of thing. What I know makes sense to me based on how I see market makers end up controlling things. If we do look at our price action, for example, let's bump back over to the article. If we look at our price action yesterday, oh yeah, well, we were just looking at that, I guess. But right here, right, this looks to me like a pretty heavy, some pretty heavy shorting potentially, right? So we move up, we get this V shape. These V-shaped moves always tell me something that has to do with, right, this looks like shorting. We get these steep V-shaped moves. This is shorting. And what does that move us through? When did we get these V-shaped moves and then recoveries? Well, we got these two V-shaped patterns, these deep Vs, push us through $25. So it seemed to me that whatever happened in the second half of yesterday's trading day, it was an attempt to create this technical pattern. I mean, right, as far as I can offer proof, it seems to me, based on what I have been looking at over the past however many months or so, I think I've been doing this now consecutively. This has got to be close to my 200th consecutive article here that I've been looking at. GameStop price action specifically. This looks like that type of move to try and get the price as close to a $25 close as possible yesterday. And whoever did this was successful. Now, what this does is this now sets us up for a move today, right? Traders, algorithms, other people out in the market to play this move, to come and do options trades, enter short positions, something like that, buy long puts, in order to shift, to take advantage of what they're going to interpret as bearish momentum heading into today's close. That will advantage the options market maker. Okay, so we saw a bit of that. The other thing, what did I notice pre-market here? And that's why I put it front and center right here. Just as we, right, prior to market open, this is around, I think this is like 7:30 Eastern time. This came out 7:40, right? 7:40 Eastern time, I think. What did we see? We saw Market Watch, right? These GameStop directors have followed Ryan Cohen's lead. The stock is rising. Now, if you pull up the article, it doesn't say anything about the stock is rising. It's just there in the title on trading platforms. So very, very interestingly, this seems to be something of a baity title to try to get potential casual traders or something like that, maybe stuck in something like a bear trap. Now, hey, I could be wrong on all of this. I would say what I would expect, what we actually already started to see develop here pre-market, And in the early stages of our opening here is a move to the upside, followed by some attempts to move the price back toward 25, and then to allow maybe a combination of interventionary shorting and then dealer de-hedging via charm. So right as there's a large volume, if we scroll down, there's a large volume of options contracts that are out of the money presently. Right. So these calls here. So we have a lot at 26 for this week, a lot at 27, 28, 30. Right. We have just in this range between 30 and 26, we have something like 50,000 calls. All right. Currently, because IV is high too, the market maker, the options market maker, is delta and gamma hedged on these positions by holding shares, right? Because the default assumption here is that the broader market or the options market is in general, because of retail household buying patterns. Typical options trades tend to bias, especially on GameStop, especially on the call side, bias long. So the dealer is typically short these positions net and is therefore net holding shares in order to remain gamma and delta neutral on these contract positions, so that they can profit in general from collecting excess premiums, right? So they're profiting off of volatility and the like. So, okay, right. And of course, these contracts are, as I say this all the time, options contracts. A single leg options contract is structured to favor the dealer. So, right, when retail goes out there, goes and buys single leg contracts out of the money, especially, the probabilities, number one, default, don't favor retail buyers. Don't favor retail traders. Do not favor whoever is holding a single leg long options contract. On top of that, we know that with a higher frequency than would otherwise be anticipated, call walls, right? Call gamma targets, collections of dealer gamma exposure with shocking consistency end up out of the money when options expiry comes, right? So we saw this even with Roaring Kitty's return last spring to X and Reddit, right? We soared as high as $80. We soared as high as 65 on the second peak pre-market. We saw this happen. We were trading intraday in the 40s, right? It was ridiculous. But in no single week did we actually trade. Did we actually close above $30? And $30, of course, was a very, very heavy call gamma positive position there. So call walls very, very frequently and with a higher frequency than would be otherwise anticipated end up out of the money. And I would expect, because the options market maker has it in their interest to make sure, with what tools are available to them, well, in this case, Wolverine Trading, to ensure that these positions close out of the money. So, right, like I said, I could be wrong here, but as these positions are out of the money, the dealer will go ahead and be able, as the probability that these close in the money dwindles, they will slowly de-hedge themselves from these positions. So they will sell shares that they will have to buy shares for their in the money positions, but there are always a much greater number of contracts that are out of the money than there are in the money. The golden ratio they like to get at least 90%. 90% or greater of the out of the money call, or they like 90% of the call open interest or greater to be out of the money. They don't seem to, if we see something like 99 point something, that's a general indicator that we're going to reverse back to the upside and we'll finish somewhere between 90 and 99. 93 comes up a lot, but certainly fewer than a ratio where it's lower than 90% of the call OI is out of the money on any given expiry. That's very rare. It does happen, but it's generally an indicator that something is going on in the background, something which may be coming up shortly. But in any case, looking at this, I would still anticipate that they would look to take advantage of some of that charm if they can, heading into the end of the day, to push us to allow that 25 position to move out of the money. So just keeping an eye on that. That's what I'm prepared for heading into today's trading. And into today's expiry. We'll, of course, be able to talk about this more today's live stream at 4 p.m. Eastern time. So do tune in for that. But let's get to this other bit, and it's what I'm looking at in terms of our liquidity here. So, Richard's been talking about this. I've paid especially close attention to a lot of this liquidity via ETFs over the past few days and such, trying to understand how looking at some of these aberrations in liquidity on XRT and how that might correspond to potential signals for a volatility phase, but also a more volatile upward move in GameStop. And one thing that Richard has pointed out is when we have these big events, right? When we've gotten close to these bigger up moves, shares outstanding on XRT will go up, but we'll see big fluctuations in liquidity. It may or may not be on the reg show threshold securities list. Right. So what we see here in terms of lending liquidity on XRT, right, we see these fluctuating highly, so including going down to zero. So this indicates that there are liquidity problems in XRT. At the same time, right, we've seen shares outstanding go up significantly. First, they came way down to 2.45 million, I think, and then or 3.5 million, and then they shot up to 8.45 million. Yesterday, they came back down to 8, but now 9.65 million. So this 9.6, 9.7, this is a value in XRT we have not seen since spring 2024. So I want to point this out. There's only 2 days in all of 2024 when XRT had a number of shares outstanding that was at this number, right? That was at 9.7 million. So I think actually one of these is 9.6 and one of these is 9.7. But in any case, we haven't seen this number since then. It occurred quite a few times in 2020, 2021, 2022, and 2023. Between these two episodes last year and June 2023, we didn't see it at all, and we haven't seen it since Roaring Kitty's return here. So the first was on April 26th. So this was a Friday. We saw this come in on April 26th, and then the following 3 days from this period, we traded down. So we had a pullback for about 3 days. Then after this pullback, this is when we started to really move back to the upside into May. And the second day last year that we had 9.7 million shares or units created in the outstanding for XRT was on the 14th of May. So that was that was the peak of this sneeze 2.0, this mini sneeze, last year. And we haven't seen this many outstanding shares since then. We did see them go up, not quite this high when we had our volatility phase in November and December, but not quite as high as 9.7. The last time we saw something like this, and I'm sure Richard is going to likely talk about this today. He has been talking about this regularly. Was back in June of 2023. So that was around earnings. There was a swap concentrated there, right? But just like the end of April last year, and into now, right, we don't necessarily have GME swaps. We're past the swaps, past earnings, so we don't have the type of catalyst that would suggest that solely based on this, we might move down like we did after this date in 2023. What is interesting, and I want to dig into this a bit more this evening in our live stream, is we do have some Chewy swaps, a number of very large Chewy swaps, which Roaring Kitty last year seems to have suggested were related to some of this upward volatility that we saw take place last year. We have some that are expiring between the 16th, so 16th, 17th, and then I think the 21st. There's a concentration there. And then we have another concentration around May 5th. So that roughly spans the same amount of time, the same trading period as this upward move in April and May last year. It's just about 2 weeks earlier this year, about 10 or so trading days earlier this year. So very exciting, very potentially interesting signal. We have a lot more to look at, right? This is not, oh my gosh, we're automatically going to $1 bajillion, right? And I'm not necessarily saying that like, am I abandoning all of my trading strategies and now it's time to YOLO or full port into calls? No way. No. That's in no way is that what I'm doing. I would not recommend anybody trade like that. I'm not a financial advisor, but from what I know about probabilities, like too easy to mess that up. I am not doing that. there are a lot of things I would like to see over the next couple of weeks to make me think that we might be in store for maybe something like this. And there were other factors involved, right? Last year, a lot of that had to do with what Roaring Kitty himself, Keith Gill, was doing with options in relation to the options market maker. And he did find them asleep at the wheel. He found the options market maker asleep at the wheel, I think, and ignoring swaps last year. So we also have to keep in mind, right, Ryan Cohen, even though he may be involved in some of this upward volatility now that he has his GameStop shares in at Schwab. He may use upward volatility like this. It may not go as high. He may use this as an opportunity to go through another equity raise for the company or do another convertible bond offering. So good to keep this in mind. And for this reason, am I not going ahead and chasing anything like this? However, if we do look at our options, we do see some specific trades coming through. We talked about a particularly bullish trade yesterday, or 2 days ago. We talked about it during yesterday's video. We do see another thing coming through here. We saw this come through during the trading day yesterday, and that is 3 very decently out of the money call block trades, or right around 5,000 calls. Now, none of them was exactly 5,000. Just last year, right, Roaring Kitty traded in exactly blocks of 5,000. So maybe he's trying to, if this is him, he might be trying to do something, come under the scanners by not having exactly 5K call blocks, but it's around 5,000. These are out of the money, and they're relatively short dated for a total across these 3 positions of, and they all came in pretty close to one another. So this is a call spread. This is an extremely bullish call spread for May OPEX. And I will notice that this came in yesterday. I'll point this out. I'll note this came in yesterday when I pointed out that we had some bizarrely low IV. We do see some weird things going on with our IV on GameStop, particularly, right, it's back up now. It's super high. But if we look at our expiries, there's a lot of fluctuation from week to week for unknown reasons. So obviously, right, the one that's always very close tends to have very elevated IV. It's quite high. But then for some reason, April OPEX is 64. That's less than half. And that's actually 64% via IV30 on Schwab. That's a 52-week low. It's also our lowest. Like, really? Next week is 52-week lows in an expected move. Why would the dealer think that next week we would have 52-week lows? That's particularly strange on IV, that we'd have a very tight price movement, nothing particularly interesting. Very strange why they don't feel exposed there, but the very next week on the 25th of April, they feel highly exposed again. Same thing with the 2nd of May. But then 9th of May, no. That's very strange. Back down again to 78. That's pretty low. That's around where our composite level was yesterday. But then the 16th of May, back to 108%. Right after that, next week, high again, but then down to 80, and then 102, 105. So this is weird, right? This is very strange. Our composite levels are back up. I will point to that, right? So we sunk super low, sounded like 71, 72, strangely, and then shot back up yesterday after the morning to over 110% composite, where we are right now. Very interesting. Curious, not exactly sure what that means, but the implications may suggest that maybe something chaotic may be coming around the corner. Not sure. And of course, keep something chaotic, loosely interpreted. So, yeah, so that's what I'm looking at here. I'm looking forward to discussing this in greater detail today on our live stream. We'll have some chance we'll have a chance to take a look at the swap data exactly, and then maybe look back and see if we can see some comparisons with what occurred in November. We'll take a look there. But at the same time, I am expecting something of a pullback. Happy to be wrong, right? Hey, if GameStop goes ahead and just kind of bulls here, like, okay, right? Yeah, I'm wrong. I'm wrong many times, right? Just trying to make sense of what's going on here. But that is how I would say what seems highly likely to me is a close below 25 based on all of these factors that we've talked about. But some very potentially interesting factors going forward, contributing to our potentially extreme upward volatility if we see anything like what occurred, last spring. So we'll have to see. We'll have to see. I'm staying cautious, prepping for this slight pullback, but at the same time, also keeping my eye out to see if we're going to have something potentially volatile and upward moving in the near future. So thanks very much, everyone. Look forward to seeing you all at tonight's live stream at 4 p.m. Eastern time. It's going to be a great time. So do stop by either on Twitter or on YouTube here. So thanks very much, everyone. We'll see you then.